Listen, I need to tell you something that's about to change everything you thought you knew about XRP. What I'm about to share with you isn't just speculation or hopeful thinking. This is real data, real evidence, and real institutional moves that are happening right now behind closed doors. And if you're not positioned correctly, you're going to watch billions of dollars flood into XRP overnight while you're sitting on the sidelines wondering what the hell just happened. I've been tracking this story for months, and the pieces are finally coming together in a way that's absolutely mind-blowing. We're talking about a financial tsunami that's about to hit the crypto market, and XRP is sitting right in the epicenter of it all. Let me paint you a picture of what's really going on here. You know how Bitcoin ETFs completely changed the game for Bitcoin? Well, we're about to see that same phenomenon happen to XRP, but here's the kicker. It's going to be even bigger. I'm talking about institutional money that makes Bitcoin ETF inflows look like pocket change. Right now, as I'm speaking to you, there are 12 major issuers with 18 different ETF products, all tied back to XRP. 18 different ways for institutional money to pour into XRP. Think about that for a second. When Bitcoin got its first ETF approval, we saw the price absolutely explode. Now imagine not just one ETF, but 18 different products all creating buying pressure on XRP simultaneously. But here's where it gets absolutely insane. The SEC just announced that they're working on new generic listing standards that could streamline crypto ETF approvals from 240 days down to just 60 to 75 days. Do you understand what this means? This isn't just about faster approvals. This is about opening the floodgates for altcoin ETFs, and XRP is sitting right at the front of that line. I've been following the traditional ETF space for years, and when the SEC passed similar generic listing standards for traditional ETFs back in 2019, the pace of ETF launches jumped from 117 per year to 370 per year. That's more than triple the launch rate. Now apply that same logic to crypto ETFs. We're talking about a waterfall moment that's going to change the entire landscape of cryptocurrency investing. But let me tell you what really gets my blood pumping about this XRP situation. This isn't just about ETFs. This is about recognition of what XRP really is. While everyone was focused on meme coins and flavor of the month projects, XRP quietly proved something that no other cryptocurrency has ever proven: resilience. Think about this logically. XRP went through absolute hell during the SEC lawsuit. Delisted from major exchanges, constant negative press, regulatory uncertainty that would have killed any other project. And you know what happened? XRP stayed in the top 10 cryptocurrencies by market cap throughout that entire nightmare. That's not luck. That's not market manipulation. That's pure undiluted strength from a community and a technology that refuses to die. Now that same asset that survived the worst regulatory attack in crypto history is about to get institutional backing through multiple ETFs. Do you see the irony here? The SEC tried to destroy XRP, and now they're about to approve the very vehicles that will send XRP to levels we've never seen before. Here's something that most people don't understand about XRP compared to other cryptocurrencies. XRP isn't your typical altcoin. I've been saying this for years, and I'll keep saying it until people finally get it through their heads. XRP operates in a completely different universe from everything else in crypto. While other projects are trying to find their use case, XRP already has real-world utility with major financial institutions. While other projects are dealing with scalability issues, XRP processes transactions in seconds for pennies. But now we're adding institutional investment vehicles on top of that foundation. It's like putting rocket fuel on an already powerful engine. Let me share something with you that most retail investors have no idea about. There's already one XRP ETF that's launching this week. The Rex Osprey XRP ETF is going to be the first official US ETF offering spot exposure to XRP. This is huge. And here's why most people are missing the significance of this. This first ETF isn't just about the money it'll bring in directly. It's about proving the concept to every major financial institution that's been sitting on the fence. BlackRock, Vanguard, Fidelity, they're all watching this launch like hawks. They want to see the demand, they want to see the inflows, and they want to see how the market reacts. And let me tell you something about market reactions. When institutions see success, they don't just follow. They flood in with massive capital that dwarfs anything retail investors can bring to the table. We're talking about pension funds, insurance companies, sovereign wealth funds. Money that has never touched cryptocurrency before is about to pour into XRP through these ETF vehicles. I've been analyzing the projections from industry insiders, and the numbers are absolutely staggering. The CEO of Canary Capital, a company that actually knows what they're talking about when it comes to ETFs, stated that XRP ETFs could see $5 billion in inflows in just the first month. $5 billion in 30 days. But that's not even the most bullish projection I've seen. The CEO of Crypto.com predicted $8 billion of investor inflows into XRP ETFs by 2026. Now, I want you to understand something about these numbers. These aren't random guesses from crypto influencers looking for clicks. These are predictions from people who manage billions of dollars in assets and understand institutional investment patterns. Here's what's going to happen, and I want you to listen carefully because this timeline is critical. The moment that first XRP ETF starts showing significant inflows, every asset management company that's been hesitant about filing for their own XRP ETF is going to rush to get their applications in. We're going to see a domino effect where success breeds more success. But there's another layer to this story that most people aren't talking about. The supply dynamics of XRP make this situation even more explosive than what we saw with Bitcoin. Bitcoin has new supply being mined every day. XRP doesn't. The total supply of XRP already exists, and a significant portion of it is locked up in escrow or held by Ripple for strategic purposes. When you combine limited available supply with massive institutional demand through ETFs, you create a perfect storm for price appreciation. Basic economics tells us that when demand significantly outpaces supply, prices have to rise. There's no other mathematical outcome. And here's something that's going to blow your mind about the timing of all this. We're not just dealing with ETF approvals in a vacuum. The entire regulatory environment around XRP is shifting dramatically. With the SEC lawsuit behind us and new leadership coming into regulatory positions, XRP is transitioning from being a regulatory pariah to being a regulatory success story. This shift in regulatory perception is crucial because it removes the last major barrier that was preventing institutional adoption. Banks, payment processors, and financial service companies can now openly integrate XRP technology without fear of regulatory backlash. This isn't just good for XRP's utility, it's phenomenal for investor confidence. Let me tell you about something called the network effect, because it's about to play out in real time with XRP. As more institutions adopt XRP for payments and settlements, the demand for holding XRP increases. As ETFs make it easier for investors to gain exposure to XRP, more capital flows into the ecosystem. As more capital flows in, the price appreciates, which attracts more institutional attention. It's a self-reinforcing cycle that, once it gets started, becomes incredibly difficult to stop. We're already seeing early signs of this network effect beginning. Major banks are testing XRP for cross-border payments. Central banks are exploring partnerships with Ripple. Payment processors are integrating XRP technology. All of this is happening while the ETF infrastructure is being built in parallel. Now, I want to address something that I know some of you are thinking. You're wondering if I'm just being overly optimistic about XRP because I'm invested in it. Let me be completely transparent with you. Yes, I hold XRP. And yes, I believe it's going to be incredibly successful. But my belief isn't based on hope or wishful thinking. It's based on data, institutional partnerships, regulatory clarity, and upcoming ETF approvals that are all converging at the same time. The risk-reward profile for XRP right now is unlike anything I've seen in the cryptocurrency space. The downside is limited because XRP has already proven it can survive the worst-case regulatory scenario. The upside is enormous because we're about to see institutional adoption through ETFs combined with real-world utility adoption from the financial services industry. But here's what really keeps me up at night with excitement about this XRP situation. We're not just talking about one catalyst. We're talking about multiple catalysts all hitting at the same time. ETF approvals, regulatory clarity, institutional partnerships, technological developments, and massive marketing campaigns from asset management companies all promoting XRP to their clients. When multiple catalysts hit a market simultaneously, the price movements aren't just additive, they're exponential. Each catalyst amplifies the others, creating momentum that can drive prices to levels that seem impossible when you're looking at current prices. And speaking of current prices, let me put this in perspective for you. XRP is still trading at levels that are dramatically below its previous all-time highs, despite having stronger fundamentals, better regulatory standing, and more institutional interest than it's ever had before. This disconnection between fundamental value and market price creates what I call a compressed spring situation. When that spring finally releases, and ETF approvals will be the trigger, the price movement is going to be violent to the upside. We're talking about the kind of price appreciation that happens over months, getting compressed into days or weeks. I've been studying market cycles for long enough to recognize when all the pieces are aligning for a major breakout, and everything I'm seeing with XRP right now is screaming that we're on the verge of something massive. The institutional infrastructure is being built, the regulatory environment is clearing up, the technology is being adopted, and the ETF approvals are imminent. But here's the thing that really gets me fired up about this opportunity. Most retail investors have no idea this is coming. They're still focused on the latest meme coin or whatever crypto influencers are shilling this week. Meanwhile, institutional money is quietly positioning itself for the XRP explosion that's about to happen. This information asymmetry creates an incredible opportunity for those who are paying attention. While the masses are chasing quick profits in speculative projects, the smart money is accumulating XRP before the ETF announcements send the price parabolic. I want to talk about something called institutional FOMO, because it's about to become a major factor in the XRP market. When the first XRP ETF launches and shows strong inflows, every asset management company that doesn't have an XRP product is going to feel pressure from their clients to offer XRP exposure. This institutional FOMO is going to drive even more ETF applications and even more marketing dollars being spent to promote XRP to institutional investors. The beautiful thing about institutional FOMO is that it happens with much larger amounts of capital than retail FOMO. When a pension fund decides they want XRP exposure, they're not buying a few $1,000s worth. They're buying millions or tens of millions of dollars worth. When an insurance company allocates to XRP through an ETF, they're moving amounts of money that can single-handedly move the market. And here's something most people don't realize about how ETFs actually work. When investors buy shares of an XRP ETF, the ETF provider has to go into the market and buy actual XRP to back those shares. This creates real buying pressure on the underlying asset. It's not just paper trading or derivatives, it's actual XRP being purchased and held in custody. This mechanism means that every dollar that flows into XRP ETFs translates directly into buying pressure for XRP itself. And with multiple ETF products all competing for the same underlying asset, that buying pressure is going to be intense. Let me paint you a picture of what the first few weeks after XRP ETF approval are going to look like. You're going to wake up to news alerts about massive inflows into XRP ETFs. Financial news networks are going to be covering the XRP story constantly. Social media is going to be buzzing with XRP content. The price is going to be making dramatic moves that get more and more people's attention. This media attention cycle is crucial because it creates a feedback loop. Higher prices lead to more media coverage, which leads to more investor interest, which leads to more ETF inflows, which leads to higher prices. Once this cycle gets started, it can run for weeks or months before it exhausts itself. But here's what makes the XRP situation different from previous crypto bull runs. This time, the buying pressure is coming from institutional sources with much deeper pockets and longer investment horizons than retail investors. Institutions don't panic sell at the first sign of volatility. They don't get scared by market corrections. They deploy capital systematically over time, creating sustained buying pressure. This institutional buying behavior is going to create a different type of bull market for XRP. Instead of violent spikes followed by equally violent crashes, we're more likely to see sustained upward momentum with relatively smaller corrections along the way. It's going to be a more mature, more stable type of price appreciation that's backed by real institutional demand. Now I want to address the elephant in the room. Some of you might be thinking that I'm being overly optimistic about the timeline for these ETF approvals. Let me share with you why I believe the timeline is much shorter than most people think. The regulatory framework for crypto ETFs has already been established with Bitcoin and Ethereum approvals. The SEC has demonstrated that they're willing to approve crypto ETFs when certain criteria are met. XRP now meets all of those criteria, especially with the regulatory clarity that came from the lawsuit settlement. More importantly, there's political and economic pressure to approve these ETFs. The crypto industry has become too large and too important to the US economy to keep blocking institutional access through ETFs. Politicians are realizing that overly restrictive crypto regulations could drive innovation and capital to other countries. This political shift, combined with the established regulatory framework and the specific circumstances around XRP, creates a perfect storm for rapid ETF approvals. I'm not talking about approvals that are years away. I'm talking about approvals that could happen in the next few months. And here's something that's going to supercharge the XRP ETF story even more. The asset management companies that are filing for XRP ETFs aren't just going to launch them quietly and hope for the best. They're going to launch massive marketing campaigns to promote these products to their institutional clients. Think about the marketing budgets of companies like BlackRock, Fidelity, and Vanguard. We're talking about hundreds of millions of dollars in marketing spending that's going to be focused on educating institutional investors about XRP and why they should have exposure to it. This marketing push is going to create awareness and demand for XRP that goes far beyond what any organic marketing campaign could achieve. But there's another aspect to this story that I find absolutely fascinating. The international implications of XRP ETF approvals in the United States are going to be enormous. Once the US approves XRP ETFs, other countries are going to follow suit rapidly. We're going to see XRP ETFs launching in Europe, Asia, and other major financial markets around the world. This global expansion of XRP ETF availability is going to create a worldwide network of institutional buying pressure for XRP. Imagine pension funds in Germany, insurance companies in Japan, and sovereign wealth funds in the Middle East all being able to easily gain exposure to XRP through ETF products. The scale of potential capital that could flow into XRP through these international ETF channels is staggering. Now let me talk about something that most people completely overlook when they're analyzing the potential impact of XRP ETFs, the derivative effects on the broader Ripple ecosystem. When XRP's price appreciates significantly due to ETF inflows, it doesn't just benefit XRP holders. It benefits every company and project that's building on or integrating with Ripple's technology. This ecosystem effect is going to create additional value appreciation beyond just the direct impact on XRP's price. Companies that hold XRP as part of their business model are going to see their valuations increase. Projects building on the XRP ledger are going to receive more attention and investment. The entire Ripple ecosystem is going to benefit from the increased attention and capital that ETF approvals will bring. Let me share with you a specific scenario that I think is highly likely to play out over the next 6 to 12 months. The first XRP ETF launches and immediately sees strong inflows, proving institutional demand for XRP exposure. Within weeks, additional asset management companies filed their own XRP ETF applications, not wanting to miss out on what's clearly a successful product category. As these additional ETF filings are announced, XRP's price begins to appreciate in anticipation of even more institutional buying pressure. This price appreciation gets media attention, which leads to more retail investor interest, which leads to additional buying pressure beyond just the ETF inflows. Meanwhile, the success of XRP ETFs encourages more financial institutions to explore direct partnerships with Ripple for payment and settlement services. This real-world utility adoption creates additional demand for XRP beyond just investment demand, further supporting price appreciation. The combination of investment demand through ETFs and utility demand through financial services adoption creates multiple streams of buying pressure that all reinforce each other. It's a perfect example of how multiple catalysts can create exponential rather than linear price movements. But here's what really excites me about the long-term implications of XRP ETF approvals. This isn't just about short-term price movements. This is about XRP establishing itself as a legitimate mainstream financial asset that's held by institutions around the world. Once XRP achieves that level of institutional adoption and recognition, it becomes much more difficult for regulators or competitors to attack it. You can't easily ban or restrict an asset that's held by pension funds, insurance companies, and major financial institutions. This institutional adoption creates a protective barrier around XRP that will benefit holders for years to come. And speaking of long-term benefits, let me talk about the generational wealth opportunity that I believe XRP ETF approvals represent. We're still in the early stages of institutional crypto adoption. The vast majority of institutional capital is still sitting on the sidelines, waiting for the right entry points and the right investment vehicles. XRP ETFs are going to provide those entry points and investment vehicles. Once they're established and proven successful, we're going to see waves of institutional adoption that could continue for years. Each wave is going to bring more capital into the XRP ecosystem, supporting higher and higher price levels. This isn't a quick pump and dump scenario. This is the beginning of a multi-year institutional adoption cycle that could take XRP to price levels that seem impossible when looking at today's market. We're talking about the kind of generational wealth creation opportunity that comes along maybe once or twice in a lifetime. Now, I want to be completely honest with you about the risks involved in this opportunity. Nothing in investing is guaranteed, and there are scenarios where XRP ETF approvals could be delayed or where the market reaction could be less dramatic than I'm expecting. Regulatory delays are always possible, though I think they're unlikely given the current political and economic environment. Market conditions could change in ways that dampen institutional appetite for crypto investments. competitive pressures from other cryptocurrencies could limit XRP's market share growth. But when I weigh these risks against the potential rewards, the risk-reward profile is incredibly attractive. The downside scenarios are relatively limited, while the upside scenarios are enormous. And most importantly, all the fundamental factors that I've been discussing, regulatory clarity, institutional partnerships, technological adoption, and ETF infrastructure development, are all trending in XRP's favor. This convergence of positive factors doesn't happen often in investing. When it does, the smart money pays attention and positions accordingly. And right now, all of these factors are converging around XRP at the same time that most retail investors are completely distracted by other opportunities. Let me tell you what I think is going to happen over the next few months. And I want you to remember this prediction, because I believe it's going to play out almost exactly as I'm describing. The first XRP ETF is going to launch with much stronger initial inflows than most people expect. This success is going to trigger a cascade of additional ETF filings from major asset management companies. The announcement of these additional filings is going to drive XRP's price higher, which is going to generate media coverage and retail investor interest. As XRP's price appreciates, more financial institutions are going to announce partnerships with Ripple for payment and settlement services, adding utility demand on top of investment demand. This combination of investment and utility demand is going to drive XRP to new all-time highs within the next 12 months. Once XRP breaks to new all-time highs, with this level of institutional backing, it's going to attract attention from institutional investors who weren't previously interested in crypto. This late-stage institutional FOMO is going to drive XRP to price levels that seem impossible when looking at today's market. The entire cycle I just described is going to play out over the next 12 to 18 months, creating one of the most dramatic wealth creation opportunities in the history of cryptocurrency. And the beautiful thing about this opportunity is that it's still available to anyone who's paying attention and willing to position themselves accordingly. But here's the key point I want to leave you with. This opportunity isn't going to last forever. Once XRP ETF approvals are announced and the institutional money starts flooding in, the easy gains are going to be gone. The time to position yourself is before the announcements, not after. Right now, while most investors are distracted by other opportunities, and while XRP is still trading at levels that are dramatically below its fundamental value, there's still time to position yourself for what I believe is going to be one of the most significant wealth creation events in crypto history. The billions of dollars that are going to flood into XRP through ETF approvals aren't going to happen gradually over years. They're going to happen rapidly over months or even weeks once the approvals are announced. And when that capital flood begins, there's going to be no stopping it until XRP reaches price levels that accurately reflect its institutional adoption and real-world utility. This is your opportunity to get positioned before that flood begins. This is your chance to be on the right side of one of the biggest institutional adoption stories in crypto history. The question isn't whether this is going to happen. The question is whether you're going to be ready when it does.